Thanks very much, Kenny, for coming in. I know how excited you are to be in front of a
Absolutely.
camera. But no, the whole idea behind us sitting down and doing this video really is we are, as estate agents, coming up against a lot of people who seem to have a lot of fear now. All you're seeing on the news is
Yeah.
about interest rates and everything like that. So it's really just to speak to somebody like yourself that's doing this every day, to answer questions that people have got that they're kind of concerned about and want to know about. Because we've spoke about it before. Most people, when they come to come to get a mortgage or come to buy a house, don't really know where to start, or they've got a lot of questions. So I thought it was a good time to sit down and have a wee chat
Yeah, no problem at
and
all.
let people know especially with the experience that you've got in the industry. So how are you finding things at the minute in the mortgage world?
The mortgage world's a bit crazy just now, to be honest. It's busy, really busy, a bit unpredictable. We've seen recently, over quite a few months, we've seen the Bank of England putting rates up the way. At the same time, we've seen individual lenders dropping their rates. So that kind of goes against what you normally see in the mortgage market. So it is a bit unpredictable just now. Generally, the lenders are there and they're adamant they're out there to lend. They want to lend. They're aware that the market is a much smaller place this year because there's a fewer transactions happening, but they all need and want their market share. So they're out there willing to lend and able to help us to place cases.
Mm-hmm.
So yeah, it's a busy place, interesting times, but yeah, we're not having too many problems, to be honest.
Aye, no, good. Obviously, I'll go into the questions that people have asked now. But how are people when they're sort of approaching you and you're giving them, their mortgage offer, or how much it's going to cost them with the new interest rates? Are you finding most people are like totally shocked, or are you finding most people are kind of expecting it when they're coming to see you?
I think, to be fair, most people are expecting it. There
Mm-hmm.
are a few who are maybe a bit unaware of what's been happening, but I think because there's been a lot of coverage in the news and the press and things, most people are expecting the increases. So thankfully that kind of saves our job a wee bit, makes it a wee bit easier. But yeah, I mean, the payments are higher now than they were 2 years ago. We can't hide from that. And it's yeah, slightly more difficult for people moving forward, but hopefully we're able to sort of work with them and work with the lenders and get something that fits for their needs.
Mm-hmm. Aye, brilliant. I'll dive into the questions that people have asked. So we put a couple of posts out on social media just to ask anybody to put a question in that they want to ask with anything kind of mortgage related, and we got a really good response, which I thought we would, because as I say, we're speaking to a lot of people
Yeah.
that are asking us, and we're obviously not mortgage advisors. So
Mm.
the first question that came in was from Alana on Instagram. And she's asked, when you get mortgage advice for how much you can borrow, how much does the quote last? I mean, I think she means how long. How long does the quote last? Yeah.
Right, okay. So I take it what she's referring to is maybe a decision in principle at that stage. So if you've had a decision in principle from a lender, how long does that last?
Mm-hmm.
Generally speaking, 30 days. There are some lenders, however, where the decision in principle lasts a bit longer. Some of them 60 days, some 90. But most of them are 30 days before that expires. The one thing I'd point out in the back of that, though, is a decision in principle is not a guarantee for the lender to lend money. It's in principle a very quick decision, but it has to be followed up with a full underwriting, a full mortgage application.
Right. So is it really up until like a mortgage offer comes through much later that's it, kind of
Absolutely.
official sort of
Yeah, I
thing?
mean, there's no guarantee at any stage until you get the mortgage offer from a lender.
Right, perfect. I was going to ask another question, but I think somebody else has asked it, so I'll leave that one there. Lewis on Instagram has asked, what's the requirements for mortgages with self-employed people?
So self-employed people are obviously treated slightly differently because their income can be variable, and also there's no pay slips and things that go with that. So generally speaking, lenders like to see a sort of continuous history of income through tax returns. And specifically what they're looking for is the documents from HMRC website. They're called the SA302 and the tax year overview for each individual tax year. Some lenders require up to 3 years worth of those documents. If you've been self-employed for 3 years or longer, you'll have those from HMRC's site. There are some lenders who are able to accommodate that for a shorter period. If you've only been self-employed for 1 or maybe 2 years, there are a fewer number of lenders available who might accept a shorter period. But generally, that's the income, the details that they're looking for to verify income. And what they'll do is they'll take the information from that as your annual income, take an average of it, and use that as the basis of assessing the application.
Right, aye, no, perfect. I think most of these questions are kind of gearing up to this, but I find that, of course, we would love people to go through ourselves for mortgage advice through yourselves, Kenny, but when I'm speaking to most people and they've kind of got these questions, I think this is where a mortgage advisor is really worth their weight in gold. I really do. It's like every time I'm speaking to someone and they've got, especially like for example, if they're self-employed, the first thing that I always tell people to do is go to someone like yourself and say, this is my situation and where do I start, sort of thing.
I mean, I'm obviously a bit biased that way, but yeah, I totally agree. I mean, if you can make things worse for yourself by trying to do it yourself. For example, we've had clients in the past who've approached several different lenders independently, and when you do that and possibly go down the route of applying for decision in principle, each time that's done, it creates a credit score on your file. And if there are too many searches done on your file, it can have a detrimental effect. So it can penalise you when you actually come to submit a formal application. So by approaching a mortgage advisor, we can do a lot of the groundwork without taking those steps, and we don't have the ability to do credit searches in the office, but we won't submit an application to that stage until you're at the point of being able to do it. But we can check out the criteria and whether you fit with each individual lender beforehand.
Aye, well, brilliant. And then we've got Lee on Instagram is asking, should I go fixed rate or variable?
It's a big question just now, absolutely. I mean, obviously there's a risk either way there. In recent times, or the last few months, couple of years, in fact, almost everyone to a person has gone for a fixed rate because rates have been increasing. They want that stability. There is a bit of a prediction just now that rates over the next year, 18 months or so, may start to come down the way. And therefore, if you do enter into a fixed rate just now and rates come down the way, then you could be stuck on a fixed rate at a higher level than would be necessary. But there's also a bit of risk that their interest rates may rise slightly further this year, and therefore a fixed rate might be more beneficial. So it really is a risk thing. We have to assess what's best for each individual client, what their appetite is and what their affordability is, depending on which option they go for. So it's not a question that's easy to answer, and it really is an individual thing just now. So I would much rather have that conversation with each individual client.
Aye, oh, perfect. Just off the back of that, I'm thinking about what people ask us round about that sort of situation just now, and I've had a lot of people asking whether they should, is there an option to sort of fix in, say someone's looking to maybe remortgage their property later in the year, is there an option to sort of fix in a rate at the minute, and if that comes down, change it, or if it's...
Absolutely. We are working with clients just now 6 months before their current rate is due to expire, so we can secure a rate 6 months in advance of it being required.
Right.
However, once you secure that, once we've got that mortgage offer, you're then not duty bound to take it. We can drop that and secure something different if a better rate comes along in the meantime.
Right, brilliant. And then we've got Caroline on Facebook has asked, if your fixed deal is ending, do you need advice to redeal, or can you do it alone via some research?
Yeah, I mean, I dare say anyone can do that if they know what they're doing. If you want to research that yourself, it is possible. But I mean, what I'd say there is that there are quite often deals and rates out there that are not available to the general public. They're only available through some financial advisors or mortgage advisors. So it may be that you get a better deal going through an advisor than you would do doing it yourself. And also trying to find a research tool that encompasses the whole market is quite difficult. But obviously, you know, we've got systems in the office that allow us to do that.
Aye, and is that one of the best sort of benefits, would you say, going through somebody like yourself, is you can look at the whole of the market a lot easier than what somebody would just going online themselves?
Absolutely, yeah. We've got the systems in place where you know, we can do it very quickly, very comprehensively. As opposed to just sitting and looking at individual lenders and what rates that they've got available.
Aye, no, brilliant. Lee on Instagram's also asked, how do I figure out how much I am able to borrow?
Okay, so there are many online calculators out there, and each lender has their own calculator. They all work on a slightly different affordability basis. If you're really trying to stretch things, which it sounds like in that instance, she may be, but again, we've got the ability to do that in the office, where we can go, identify which lenders are possibly able to lend that slight bit more, and find out whether she fits all the other criteria that goes with it as well.
Right. Oh, perfect. And then we've got Carol Ann on Facebook who's asked, where do you start when getting a mortgage? Which a lot of people ask us, to be honest with
Yeah.
you. It's like they don't know where to even begin when they're
Yeah,
thinking
yeah.
about buying a property and how to get a mortgage.
The easy answer to that was to speak to a mortgage advisor, but yeah, I mean, I think what you have to do to make sure that you're at that place and ready to do it is making sure that, first of all, and quite importantly, your credit file's in a good place. That has a big impact on any mortgage application. If there's anything on there that either shouldn't be there, and mistakes do happen, so we do come across situations where there's something in your credit file that maybe isn't yours or shouldn't be there. But making sure it's clean and acceptable to a lender, making sure that you've got the right level of deposit that may be applicable to your situation, other documentation, having all that in place, knowing what your budget might be, and what your affordability is as well. I think those are all the key things to take into consideration when you're looking for a new mortgage. Now, again, the criteria for all that varies from one lender to the next, so there's no uniform answer to that across the industry. But again, I keep going back to it, but it's where we can help and that side of things, and sort of make sure that everyone has the full range of options available to them.
Aye, no, brilliant. Again, it's something that I always advise. So the first thing someone will ask me is, like, I'm thinking of buying a new house or thinking of selling my own house, sort of where do I start? And the first two things I always tell them to do is, one, get a valuation from an estate agent on your house to let you know exactly what your home's worth and what the process is, and also at the same time speak to a mortgage advisor, because you really need to make sure that all kind of adds up and works out, and that kind of then sets everything else in motion after that.
Absolutely. I think that the other thing I'd add into that, I know I keep saying, speak to an advisor, but I mean, I really do think it's a really important step for people to take. But there's a general misconception out there that that'll cost people as well, that there is no cost for consultations at that level. So if somebody's just making inquiries and she just wants to find out how much they can borrow or different questions like that, there's absolutely no cost involved in that for us to have that conversation with clients. So it's just that it's a question we get asked often, and I just wanted to kind of get that out there.
Aye, no, perfect. I'll touch on this at the end, but I never really said at the start. Kenny works beside us at Bridges Mortgages, so a lot of you have kind of spoke to Kenny before, and Nicky. So if anyone's looking for any mortgage advice, like we've just spoke about, if you get in touch with us, we'll put the details up on the post, and either Kenny or Nicky will be able to give anyone free mortgage advice and a free consultation. So next question's from John on Facebook that's just said, what do you think the future mortgage rates will be? Do you think they will come back down again?
Yeah, I mean, there's different thoughts and different things influencing interest rates just now. I think the industry as a whole is expecting the possibility of maybe another increase this year. And then during 2024 and possibly into 25, we'll start to see rates start to relax again. There's no hard and fast rule about it. There's no guarantee that might happen. There's lots of influencing factors, but I think generally speaking, we will see rates settle at a slightly lower level than we've got just now. I don't personally think that we'll ever see rates going back to where we have been for the past 12 years or thereabouts, because they've been unnaturally low. But I do think they will settle lower than they are at the moment.
That goes back to a lot of conversations I'm having just now as well. It's like mortgage rates, as you say, they were at, was like an all-time low, could we say? Aye,
absolutely.
For a while there, and I think what people are struggling with is, after COVID, obviously house prices have kind of went boom.
Yeah.
Now that you've got this sort of I'll say double whammy because of the mortgage interest rates going up, but also everything else going up as well, like your bills, your even your food shop, how much that's went up over the last couple of years. So I think people are kind of feeling the pinch all over just now, which is obviously from our side of view, we can see it's had an impact on the market. But what I'm saying a lot to people at the minute is it's back down to more normal levels. Like if your house was selling in like 2 days, like that's even a 100,000, sorry, or £200,000 house, a sale like that probably shouldn't happen in just a couple of days, but that was like the norm for months there in a couple of years. So now that things are kind of settling down again, it's back to kind of normal levels, as I call it.
Yeah, I think so. I mean, I think obviously that there are some uncomfortable conversations to be had out there just now, unfortunately, as people start to feel the pinch with the cost of living crisis. Mortgage rates been high, and as you say, food and fuel and everything have been higher as well. But I do think it's a short-term thing. I think the light is potentially at the end of the tunnel. We're seeing inflation starting to drop already. And longer term, if that continues, then that does result in interest rates coming back down the way as well. So hopefully, if interest rates come down the way and then the cost of fuel and all the rest starts to settle as well, then we'll get back to some sort of normal life, before too long.
And just on that as well, so if anyone's sort of struggling financially and wondering what if their mortgage payments are due to go up, or they're struggling with their mortgage payments at the moment, is that something that they could get in touch with about as well?
Absolutely, yeah. We're quite often having conversations with clients who maybe are aware that their mortgage rate's due up maybe next year sometime or the end of this year, and they just want to know what lies ahead. So we're more than happy to have that conversation and try and put minds at ease, or at least inform people as to what it looks like.
No, brilliant. So what was the Lee on Instagram as well is the next question, and she's asked, what is the lowest interest rates that you're getting just now?
So if we'd had this conversation 2 years ago, they started with a 1, but now they're really start with a 4. Yeah, you're talking about between 4 and 5%, generally speaking, for most residential interest rates. Fixed or tracker are all within that band, unfortunately that's where we are. However, in saying that, if we'd had this conversation about 3 months ago, they were starting with 5s and 6s, so we have come down a bit. So it is better now than it was back at that stage, but still not as good as it has been in the past.
Aye, right, perfect. And then we've got Amy on Facebook asking, do we need a 10% deposit, or would you advise to have more?
So as far as deposits go, I mean, there is the possibility in the right circumstance to be able to secure a mortgage with a 5% deposit. So those are still available just now. 10% is obviously better because the bigger the deposit you have, the better the interest rates that you get. 10% would be a good starting place. If you have more, the more you put down, the better the rate you're likely to get. There are certain tiers that you go through. So maybe once you've got a 25% deposit, you get a slightly better rate again. So that changes again from lender to lender and from week to week almost. So it's worthwhile having that conversation and just seeing how it looks and what's currently available.
Something that, like when we bought our first house, it was before I had done this, and what I never factored in, which I always speak to people about, is if it's going to be 10% for your mortgage, but also factor in removal costs. If you're moving home, any stamp duty that you might pay. These are all things that came as a bit of a surprise to me. And furnishing your house if you're a first-time buyer. Like I forgot that I'd need to put a couch in my house, like things like that.
And that's a sort of conversation we'd have with anyone in that situation. But I mean, you're right. There's stamp duty, there's legal costs, there's removal costs, there's furniture, there's offers over if you end up offering over for a property. All these other bits have to come out that same pot. So that may restrict what actual deposit you've got available to put down. But we'd break all that down with someone and just make sure that everyone's comfortable with what it looks like.
Brilliant. And then we've got Holly on Instagram as well, that's asked, if you have bought a house and have a fixed term mortgage in place and currently live in the house but are thinking of renting it out, do you need to change the mortgage over to a buy-to-let mortgage?
Yeah. So on that one then, there's a couple of different options that you've got. I suppose long term, yes, it should be transferred to a buy-to-let mortgage. But if you're still in a fixed rate, to move away from that onto a buy-to-let mortgage may incur an early repayment charge. In that instance, what you can do is you can contact your current lender and ask for what they call consent to let. Now, that's a process, an application process. There's no guarantee that they will consent to that. They'll look at the financials on it and make sure that it works for them. But most lenders are accommodating to it and will allow you to rent it out for maybe for a year at a time until you get to the end of your fixed rate period, and then you can move away onto a buy-to-let with no early repayment charges.
Right, perfect. So see, are you allowed to, so if you're in just a normal sort of mortgage and then you go and rent it, I take it you need to let the mortgage lender know that you're going to be renting it out?
Absolutely, yeah. I mean, the terms and conditions of a residential mortgage state that no one else will live in it other than you and your family. So if you're going to rent it out to someone else, first of all, you have to let your mortgage lender know, but also you'd have to make sure you put the right type of insurance in place, because your standard home insurance won't cover someone else living in the property.
Right, aye, perfect. That's us. That's everybody's questions answered. So thanks very much again, Kenny, for agreeing to come down and sit down and do this.
I know I'm aware it's a minefield for people out there. I mean, I haven't done the job for over 30 years. I mean, obviously we've been through most scenarios, but we still get hit with some unusual ones. But no, I would much rather sit down with anyone and make sure that they're totally comfortable before they enter into it. It's a huge amount of money you're paying and spending and committing to things. So it's important that you're fully aware and got the grasp of exactly what's going on.
Oh, brilliant. I suppose it's the same as us. If someone gets us out to value their property, I think that people think it's a really scary thing to do.
Yeah.
To get us, I come across a lot of people when we're coming out to value their property that are really uptight and very, very anxious about becoming. And I try to back through doing videos like this and explain to people that it isn't that scary. It's quite a relaxed chat. I take it if someone is looking to book an appointment through yourself for a consultation or Nicky, that it would be pretty a relaxed appointment. What kind of happens at the appointment?
I mean, generally speaking, we would just try and understand a bit about them and their financial situation and what they're looking for. So, I mean, it's very, very basic information that we need about them, their personal situation, their financial situation, salaries, any commitments that they've got, and the deposit they've got available. And that's really what we need to start making an assessment on it and help them to understand kind of what they may be able to achieve. It's a relaxed situation. It's not a scary thing. I know a lot of people kind of put off contacting us because they don't want to speak to us or whatever. But yeah, we're in there to help people. That's exactly what we're here for. So we'll make it as relaxed as possible, and just make sure that they're comfortable with it all.
Oh, brilliant. And I suppose if anyone is out there that's looking for any mortgage advice, if you're thinking of selling your home or buying a new one or remortgaging, anything to do with property or mortgages, please feel free to get in touch with us here at Bridges Properties. And as I say, if it's mortgage related, we can get you booked in for a phone call with Kenny or Nicky.
Yeah, no problem at all.
But again, thanks very much for agreeing to do this.
No worries, Chris.
Thanks very much,
Excellent.
Kenny.
Cheers.
Thank you.